Hi, I'm Emily Haynes. I'm a CPA and the founder of Expat Tax Solutions, a boutique US tax firm specializing in Americans living in Germany. In this video, I want to talk about giving and receiving gifts and inheritance as a US person abroad. I'll go through some informational filing requirements, the exemptions, the exclusions, and what to look out for if you're giving or receiving gifts or inheritance. But first, of course, a disclaimer. So while I am a CPA, I'm not your CPA, so the information I'm providing is general and educational and not specific to your situation, and it shouldn't be relied on. If you have questions about your individual circumstances, please hire a professional who can look closely at your unique individual situation. So first, let's talk about a US person giving gifts or bequeaths to anyone, US person and non-US person, anyone. So in the US, for US tax residents, so this is citizens, green card holders, people living in the US, there's a lifetime exemption for gifts and estates for 2024, it's 13.61 million. This may or may not be cut in half in 2026, so that would be around, what, 7 million? That depends on Congress's ability to pass laws, who knows. For now, the lifetime exemption is 13.61 million. So that means that over a lifetime, you can give away that much in either gifts or inheritance, and there's not going to be any taxes owed. So that's pretty high. If you're not acquiring a multi-million-dollar wealth, then gift and estate taxes probably aren't a concern for you. If you give gifts above that amount, or if you have an estate your loved ones will inherit, you have to pay taxes on the excess. So let's say you have a fortune of 14 million and you're very generous and you want to give it all away to a friend. It's very nice, it's very generous. So 13.61 million of that is going to be tax-free. So you'll only owe taxes on the last 590,000 of it. And then if you acquire 20 more million in wealth, when you die, you will have already used up your lifetime exclusion, so you'll pay taxes, or rather your estate will pay taxes on that amount. So the exclusion is a lifetime exclusion. That's kind of your bucket, and you get to draw from it whenever you give a gift to someone, however much. Additionally, there's an annual gift exclusion. For 2023, that is $17,000. And with the annual gift exclusion, you can give any one person $17,000 in a year without any tax implications at all. So if you have $17 million and you want to find 1 million different people and give them each $17,000, that's fine. You haven't touched your lifetime exemption. So then you could also give away 13.61 million to another friend to use up that exemption, but altogether you wouldn't owe any taxes. If you give gifts over 17,000 to one person in a year, you can do that without owing taxes, but you need to file a gift return to the IRS to let the IRS know, because that reduces that lifetime exemption. So if you give someone a gift of $117,000, your lifetime exemption is not 13.61 million anymore, it's now 13.51 million because you've used up 100,000 of that lifetime exemption. And the important thing to note here is that it's the giver of the gift that's filing the tax forms and paying the taxes. So let's talk about receiving gifts as a US person living abroad. So for US purposes, the gifts you receive are after tax. So if someone gives you $1 million or you inherit $1 million, congratulations. For the US, you don't owe any taxes on that. It's great. However, there are two considerations. So first is the informational reporting required for gifts and inheritance from non-US persons, companies, legal entities. Anytime you're getting a gift from some entity that is not a US person. So if you receive gifts or inheritance from a non-US person over $100,000 in any year, you must file Form 3520 to the IRS. The actual information that has to be reported is not super extensive, and this is not super hard to do or onerous, and it doesn't lead to taxes, but it absolutely has to be timely filed. That means that if you live outside the US, it must be filed by your tax return deadline of June 15th, and if you file an extension for your US return, you have until October 15th to file this form. There is an additional extension to December 15th for filing your income tax return, but that doesn't apply to this form. This form has to be filed by either June 15th or October 15th of the year after the gift was made. Period, no exceptions. This form is filed separately from the rest of your tax return. It goes to the IRS Service Center in Ogden, Utah. Most people living abroad are mailing their tax returns to Austin, Texas. And it gets filed separately. So just the nature of this with the different deadlines, going to a different place, it's a really easy one to screw up or miss or not even know that you need to file it. The problem is the late filing penalty for this form is 25% of the value of the gift. So if you received a $100,000 gift, the late filing penalty on that would be $25,000. And if you received a gift of $1 million and late file this form, even a day late, there's a good chance that the IRS will send you a bill for $250,000. And they've been very aggressive lately in giving out these penalties and in not accepting the normal excuses that sometimes you can get away with for other things. The other consideration is going to be local gift and inheritance rules. So this really varies by country, and I'm a US CPA, so a US tax advisor. I'm certainly not an expert in any other country's gift and inheritance tax laws. But in many countries, and this is the case in Germany, it's the person who receives the gift or the inheritance and is the person who's reporting it and owes the taxes. So this is quite complicated. There's many different exclusion amounts, there's many different rules. So as a resident of another country, you're often going to be subject to gift and inheritance tax based on residency. So if you're a US citizen living in Germany and you're receiving gifts or inheritance from your US family or friends, you are likely to be paying German gift and inheritance tax on that. You really need to discuss the details with a local tax advisor in the country that you're living. So for Americans who grew up in the US and are maybe familiar with the US inheritance tax system of receiving gifts and inheritance after tax, it's not a very nice surprise to learn that you might owe taxes to Germany or any other country on things you inherit from the US. On the other hand, for dual citizens or US citizens who grew up in Germany and are familiar with the German system, it's the opposite, and quite nice to learn that as the receiver of a gift, you won't have any US tax implications. Now, if you receive an inheritance from a family member in the US, for example, often in the US that inheritance will include retirement accounts. And if they had an IRA or whatever retirement account, some of the rules for inheriting those retirement accounts are that once the account is transferred to you, the funds have to be distributed. So first the account is transferred into your name, and if the value of the estate is under 13.61 million, then there's not going to be any estate tax. That's tax-free. But once it's in your name, the amount in the retirement account might get paid out to you. And that's income and it's taxable. And I think that's confusing for a lot of people because it feels like inheritance tax. And they go, well, I thought there wasn't any estate tax owed on this. But it's actually two separate things, and then you owe income tax on the income. And this depends on the country where you're living and if there's a treaty and what the exact terms of it are. But if you're in Germany, the US tax treaty says retirement income is going to be taxed in Germany. So in this situation, what you're getting is retirement income. And that's going to be taxed in Germany. And then you get credits for the German taxes paid to offset your US taxes owed to avoid double taxes. That's also a situation where you need to be discussing that with a local tax preparer who can make sure that they're doing that correctly in the country that you're living. I will also note that there are completely different rules for gifts and inheritance of real property owned by US non-residents. The thresholds are very low. So if you're not a US tax person, so you're not a citizen, not a green card holder, and you don't live in the US, and you own, for example, a house in Florida, the exemption amount is only $60,000. So if you pass away owning that house, it's likely to be worth more than $60,000. And there will be taxes owed on that. And that is a specific planning situation that is great to talk to a tax expert about. So to sum up, if you aren't acquiring a multi-million-dollar estate, you probably don't need to worry about owing gift and estate tax in the US. There are some reporting requirements if you're the giver of gifts and if they're over $17,000 per person per year. There are very important reporting requirements for the receiver of gifts of more than $100,000 from a non-US person. And if you are receiving gifts or inheritance, you really need to be discussing this with local tax advisors in the country where you live. So I hope that's been helpful. Please subscribe to the channel to keep up to date on future videos and information.